The top business stories live from the Sky News City studio.
3, 2, 1.
UK's fourth largest supermarket to open 500 more stores.
We're spending £1.3 billion. That's seeing 40 new Aldi stores opening this year. That's actually one every 7 days.
Vauxhall's manufacturing plant in Ellesmere Port becomes the first in the UK to solely manufacture electric vehicles. Plus another FTSE 100 company, Smurfit Kappa, looks set to abandon the London stock market for New York. Good afternoon, this is Business Live with me, Ian King. 33 years after it opened its first store in the UK, the German supermarket chain Aldi unveiled its 1,000th today, and it announced plans for 500 more as part of a £1.3 billion investment. I've been speaking to Giles Hurley, he's Aldi's UK and Ireland chief executive, and asked him if he was confident that they'd find sufficient space for such a large building spree.
Yes, we are. I mean, there is a huge opportunity across the UK, and our ambition and appetite and the will to grow the business is pretty relentless. And of course, that's underlined by significant capital investments. Of course, you know, there'll be an ebb and flow depending on site availability or the planning progress. But you know, the only time pressures are the ones that we put on ourselves, and of course, the responsibility that we feel to bring our offer to more communities across the country.
You've claimed in the recent past that some of your competitors have tried to hamper your expansion by lodging planning objections. What sort of evidence do you have for that?
Yeah, I mean, I think there's widespread evidence to suggest that that's the case, and you know, that's appeared in numerous publications. But I think what's important for customers is the knowledge that we are absolutely focused on ensuring that we continue to bring our offers to more communities across the country. We're laser focused on ensuring that we continue to be the lowest priced retailer in the UK, no matter what.
If you look at the industry as a whole, you're adding more space than the rate at which demand is growing. So it obviously goes without saying you are targeting market share here. What sort of market share are you ultimately seeking?
Yeah, I think while others have been slowing down, we've definitely been scaling up because, you know, the opportunity that we see. I have to say that market share has never been a particular KPI or target for us. We've always said that, you know, we'll just keep on opening stores until we think we've reached capacity, and all of our work at the moment suggests that we can comfortably reach 1,500 stores.
And what's your assessment on the inflationary outlook right now? We heard from the Governor of the Bank of England yesterday indicating that he thinks inflation is coming down. Is that your assessment?
Yeah, I mean, look, the inflationary situation has been very difficult for households across the country, and you know, the retail sector clearly hasn't been immune from that. I think positively, over the last 5 months consecutively, we've seen food inflation reducing. We still know it's very tough for customers out there, but where we can, we're seeking to pass on savings. And actually, just this week, we reduced 12 retails covering the cheese category and the household category, and that was an investment of around £3.5 million. And I'm actually optimistic that between now and Christmas, our customers will continue to see price reductions in our stores as we look to pass on savings. I think when it comes to the longer term outlook, it's a bit more difficult to assess. We've seen very clearly over the last 2 years the number of different factors that can influence the grocery sector in particular. I think what I can guarantee is that no matter what, we'll always have the lowest prices in the UK, and that is a very clear contract that we have with our customer.
Yes, you've mentioned price and value a great deal in this conversation. Obviously, you're thriving during the cost of living crisis, but once inflation starts to abate and the conversation in the grocery sector returns to issues such as quality and provenance, do your somewhat limited ranges leave you at a bit of a disadvantage compared with the traditional grocers?
Well, I think there's been a real change in customer habits over the past couple of years, and there's been a major shift away from branded goods to own label. And you know, 90% of what we sell is Aldi exclusive label. And what customers realise is that they can get the quality that they expect, but at a fraction of the price. So really, they can have their cake and eat it. And I think when it comes to provenance, that's a standout attribute of our quality and our range. We work with over 5,000 British suppliers. 75% of what we sell comes from British producers, manufacturers and suppliers. So it's an area that we're very excited about in terms of our offer, and I think it's something that is really noticeable for our customers when they come shopping in our stores, and that's reflected in very clearly in some of the statistics. We actually overperform in British premium beef, for example.
Some other stories for you now. And another FTSE 100 member company looks set to abandon the London stock market for New York. The paper and packaging giant Smurfit Kappa said this morning it was in merger talks with US peer WestRock. The combined business, which would be worth around $20 billion, would be called Smurfit WestRock. It would be incorporated and domiciled in Ireland with its global headquarters in Dublin, and would be listed on the New York Stock Exchange, with its premium London listing and its listing on the Euronext Dublin exchange cancelled. The chief executive of the FTSE 100 engineering group, Melrose, is stepping down after more than a decade in the job. Simon Peckham was one of the founders of Melrose, which specialises in buying underperforming engineering businesses, improving their performance and then selling them. He led the company's controversial £8 billion takeover of GKN in 2018, the UK's biggest hostile takeover in a decade. He'll be replaced by the company's chief operating officer, Peter Dilnot. News of his departure came as Melrose reported a half-year pre-tax profit on an adjusted basis of £134 million for the 6 months to the end of June. That was up from £9 million in the same period last year. Direct Line is to sell its brokered commercial insurance business to the parent company of rival RSA for £520 million. The business, which trades under brands such as NIG, FarmWeb and Churchill Expert, provides commercial insurance via brokers to farmers, SMEs and landlords. Well, the news came as Direct Line, as expected, reported a widening of pre-tax losses to £76.3 million for the 6 months to the end of June. That was up from £11.1 million in the same period a year ago, and reflected continued high claims inflation among motor insurance customers. Vauxhall's manufacturing plant in Ellesmere Port has today become the first in the UK to solely manufacture electric vehicles. The multinational giant Stellantis is investing £100 million in upgrading the plant as part of its drive to become carbon neutral. It will produce the Vauxhall Combo electric van and its Opel equivalent, as well as compact vans for both Peugeot and Citroën. I've been speaking to Vauxhall's managing director, James Taylor.
We've got a £100 million investment into Ellesmere Port, first electric plant globally for Stellantis and the first pure electric plant in the UK of any brand, of any scale. And we've actually gone beyond that investment with a further circa £20 million investment to do more of the stamping and also in terms of plastic moulding to generate more of the parts locally on site. So clearly we want to be cost competitive. That's part of the reason why Ellesmere Port's been chosen for this to be this first pioneering project, and very much we encourage and we want to grow that going forward.
And what about the battery?
Well, currently the battery comes from China. We've actually in the process of building 3 gigafactories in Europe currently. So very shortly, those batteries will then come from those plants in Europe.
Obviously, under the rules of origin provisions with the UK's Brexit agreement, from next January, 45% of a vehicle must come from the UK for it to be tariff-free export to Europe. I mean, the likes of Mercedes-Benz have been very critical of this and said this provision should be put forward to postpone to a later date. Would you agree with that?
Yeah, I mean, clearly anything that adds costs onto electric vehicles, when you're comparing those to a traditional petrol or diesel vehicle, isn't welcomed. Clearly, we need to make sure the transition to electric is affordable. So we are working hard with government to try and extend that deadline.
Ellesmere Port will also be producing compact vans under the Citroën and Peugeot badges. When is that likely to take place?
Yeah, so that's all starting from now. So it's building Vauxhall, Citroën and Peugeot. Fiat will carry on at the early part of next year. We'll also be expanding the range to build the passenger variant, a people carrier variant of that vehicle as well in 2024. It's got a total installed capacity of around about 50,000 units a year.
And in terms of those electric passenger vehicles, what more needs to happen at the plant for that production to get underway?
Well, with any production, new models, you always build one model at a time. That makes sure we maximise our quality. Very, very important. We want to be a leader on quality as well. So it's just the usual cadence of products coming into a manufacturing facility and building the various derivatives.
And in terms of the vans that on which production has begun today, what percentage of those are destined for the export market?
Well, that, again, remains to be seen. Clearly, it's going to build all of the right-hand drive domestic volume. In terms of export volume, that will depend on the various demands in the various markets. In the UK, we've got the plug-in van grant. That means, really, from a customer point of view, if they look at total cost of ownership, and with the lower prices of electric, and particularly if you've got access to overnight tariffs, the total cost of ownership is broadly in parity with that of a diesel. In other European markets today, there tends to be not as many subsidies on commercial vehicles, but that could, of course, change. So it makes predicting demand very difficult.
What more needs to be done to encourage greater take-up of electric vehicles among homeowners, households?
Yeah, I think, well, equally, I think that applies for passenger car and commercial vehicles. I think one of the biggest challenges for people choosing an electric vehicle today is access to charging infrastructure and that reliable access to convenient charging. So it's really important that now that we educate and inform the council of the government funding available, of which there's significant amounts, to really accelerate that on-street charging provision, because that's the biggest barrier today for people choosing an electric vehicle.
Figures published earlier this week suggest that the Eurozone is inching closer to a recession. Well, one person very well placed to comment on this is Martin Vahanka. He's the founder and chief executive of Eurowag, the pan-European business that enables haulage companies to use a single payment system for fuel and tolls and to make insurance and VAT refund claims across borders. Today it reported a pre-tax profit of €8.5 million for the 6 months to the end of June. That was down 37% on the same period last year, which largely reflects the cost of a rise in investment. I'm very pleased to say Martin Vahanka joins me now. Welcome to you, sir. You actually note it in your statement here, macroeconomic headwinds across Europe. Where are those headwinds blowing hardest?
It's a combination. It's not just one factor. It's high interest rates, inflation, of course, Russian war in Ukraine. All these things are coming together. What we've seen that there is a less production of the physical goods. A lot of companies were growing, but just because of increasing prices. So it was a bit hiding the fact that there is a lower production of physical goods, like in construction sector or in automotive.
Are you confident that the Eurozone can avoid a recession?
I think that it's already in recession. Yeah? So, and how it will evolve, we are modest in our expectations. Of course, we do not have a crystal ball, but we are hoping that recovery will come soon.
I mean, obviously, you've been investing very heavily in the business. You've also done an acquisition in the period. Does the economic backdrop change the assumptions that you make in terms of when you'll get the return on capital that you're looking for?
No, it absolutely does not change. Eurowag is in a business 27 years, and we've seen such a cycles. And back in 2008, it was very severe in COVID, and as well now. And we've demonstrated that even through the cycles, we can go through very successfully with strong double-digit growth.
So what sort of trade flows are you seeing across Europe right now? Where are things still pretty normal, as it were?
It really depends country by country. What we've seen that really war in Ukraine has shifted the flows. So everything what was going from west to east was interrupted, and now it's more spread across Europe.
And what about these cross-channel routes between the UK and continental Europe? Are they returning to a more normal state? Is there less chaos than there was?
There was chaos directly after Brexit because of the new requirements, new paperwork which they need to do. But this is very much stabilised now.
Well, that's encouraging to hear. What about tell me about the investments that you're making then. I mean, you've been quite vocal about the fact that the road haulage industry is not that digitalised.
Absolutely. This is the key problem, and which was not solved for decades. And from the lack of digitization are stemming a lot of problems. The first one is that this is high labor intensive and low profitability. So and it's not attractive for people to work there. It's 24/7, all the times they are on the phone, and it's difficult to execute for such a small reward. So digitization is really the answer. The next problem is low utilization of trucks. Surprisingly, 30% of European trucks are empty. Smaller companies, which are operating typically haulage companies, they are doing 8,000 kilometers a month. Meanwhile, the champions can do 12,000. So you see there is a huge opportunity while digitizing the ecosystem to improve utilization and reduce carbon footprint. And the last one, which I would mention, is low access to financing. Again, trucking companies are having on average 7 trucks. So they are really small businesses, and they are having difficulties to deploy new trucks because every new truck represents a huge investment upfront, and they do not have access to it. And again, digitization, working with them closely is the solution.
And what are the kind of tweaks that you're making to your product offering just now?
Basically, what we are doing, that we are integrating all the services which truckers need into one platform. And this way, we are simplifying, we are digitizing, we are automating their work. And on a basis of digitization, we are better connecting them with outside world, be it energy providers, toll chargers, or providers of the next load, or regulators.
All right, Martin, we have to leave it there. It's a busy day for your results day. Do appreciate you spending the time to chat. Thank you. Still to come here on Business Live, we'll have a look at how the markets have closed this Thursday afternoon. Don't go away.
I'm Katie Spencer and I'm Sky News' arts and entertainment correspondent. When you think of Glastonbury, it's mud you want and music. They're going to cross to us live in a minute. Okay.
We always were capable of doing this.
Oh, they're wonderful children as an audience.
Who did that? Maverick, here on the red carpet. I'm so excited. We take you to the heart of the stories that shape our world.
Nor have I ever struck any woman in my life.
There's this illusion of power.
Are you feeling well?
I remember covering the Oscars and that now infamous moment, the Will Smith slap. You can tell from these crowds just how excited people are for the return of Fly.
These actors playing the lead roles were born long after the Sex Pistols broke up.
As a team, we've interviewed some of the biggest stars in the world.
Okay, I'll talk to you.
Don't leave me!
Yeah, okay.
There's no easy goodies. There's no easy baddies.
Thank you.
Thank you.
Bye.
It's like Emirates. It's like better. Fly Emirates. Fly better.
Thank you.
Well, sterling remains under a cloud after hints from the Bank of England Governor Andrew Bailey yesterday that interest rates are close to having peaked. The pound is currently off by just over 1/6% against the US dollars, more or less unchanged right now against the euro. On the equity market, stocks in Europe have had another downbeat session. All of the main continental European indices lower. That makes it 7 consecutive days of reverses. Here in London, the FTSE 100's bucked the trend. It's finished 1/5% higher. That's largely down to gains for some of the big dollar earners, the likes of Rolls-Royce, for example. In terms of percentage gainers, though, well, the leading blue chip gainer there was Melrose, up by 5.5% there on news of another share buyback, while the paper and packaging group Mondi finished nearly 1% higher following the merger involving its rival Smurfit Kappa. Smurfit Kappa itself, by the way, off 3.75%. Maybe some London-based investors already looking to get out of that ahead of a possible delisting. Outside the FTSE 100, Pets at Home has finished down just under 9.5% lower. That's after the Competition and Markets Authority launched an investigation into the veterinary services market. The specialist veterinary services group CVS finished off nearly 28% for similar reasons. Over on Wall Street, well, weakness in Apple after the Chinese government barred employees from allowing them to use their devices for work. That's weighing on the indices again. Apple itself is off just under 3% right now, while the S&P 500 and the Nasdaq are both trading lower this afternoon. As for the oil price, well, that continues to trade close to the 10-month high that it hit earlier this week. A barrel of Brent crude will currently cost you $90.40 a barrel. That is off just under 1/4%. Well, joining me now, great friend of the programme, Paris Anand, Chief Investment Officer at Artemis. Paris, great to see you.
Good afternoon.
Didn't mention the Asian markets there, but obviously we had a sell-off overnight. 4th consecutive month that Chinese exports have fallen.
Yes, and I think one of the reasons that that's been so much in focus actually is because the export sector over the last couple of years has been the area of strength for the Chinese economy. And what people have been focused on and had higher expectations of at the start of this year was that the domestic economy was going to recover. Now, that's really disappointed, and I think compounded that with the sort of the weak export numbers, and it's really made a lot of investors even more bearish and concerned about China in the near term.
There's been a lot of talk about stimulus measures. Do you have any optimism that they will work, or is China in more trouble than we think?
So I definitely think that what we're likely to see over the coming quarters is more sort of determined sort of stimulus measures from the government. I don't think we're going to see anything like what we might have seen in the wake of the financial crisis. But actually, I'm quite optimistic as we kind of look over the next few quarters that progressively the Chinese economy is going to recover domestically. And actually, given that, you know, I'm more optimistic on the prognosis of the general global economy, even that export sector, even though it's sort of weaker than it was last year, I still will continue to be quite strong.
OK. Well, it's a busy day for corporate news. One that caught your eye was Jet2.
Absolutely, and I think one of the things that I caught my eye about Jet2 was the fact that against the backdrop of all of the disruption that we saw with the air traffic control and wildfires and so on and so forth, they still upgraded their profit guidance. I think that was, you know, a result of two things. One is that the demand in the market is quite strong, so good late bookings and good forward bookings for the winter season. But also they, as an operator, have done very well relative to their peers.
They've got their long-standing CEO is about to retire. Do you worry about that, or is the business model robust enough to see it through that?
It's a great question. No, I think they've worked very well on the business model. They've got good customer service, they've managed their balance sheet well, and they have a good corporate culture. And what we tend to see is that companies with really strong corporate cultures, they also manage succession planning well.
And one of the big investment themes this year, of course, has been AI, but most of that attention has been on some of the big tech stocks in the US. You think there are other things that could be at play here?
Yeah, absolutely. I mean, I think that the AI is a huge theme, but it's interesting that in the market, the focus has been very narrow. I mean, I'm really interested, for example, in areas like healthcare. So if we look, for example, since the 80s and 90s, the productivity of R&D pipelines has been very, very poor. So I think the application of AI to the healthcare sector could just yield significant results, both for the companies but also society more broadly.
And you don't think that's being factored into
Absolutely
market
not,
valuations? No. Why is that? Is this?
I just think it's because the focus really has been on, if you like, it's very similar in a way to when people looked at the internet and they were focused on Cisco rather than they were focused on the people who were utilised the technology to kind of transform business models. And if we think about AI as a productivity tool, one of the interesting things to focus on is areas where productivity has been low, and that's what sort of led me to thinking about sort of R&D productivity.
Are many of the big pharma companies being forthcoming with you on the sort of things they're doing?
Yeah, I mean, you know, they're always optimistic about their pipelines, but what we can start to see is maybe a different way that they will start to sort of trial drugs, do testing, you know, look at the data. And we see that data in that area over the last sort of few years has really expanded. So, yeah, we're starting to see, you know, companies talk very positively about AI. Now, clearly the proof is going to be in the delivery. But what the good thing is today, from an investment perspective, is you're not paying a lot for that upside.
OK, Paris, got to leave it there. Great to have you on the set today.
Yeah,
Thank
good
you.
to see you.
That's it from me. I'm back again at 11:30 tomorrow morning. We've got a bit of very brief breaking news to bring you now. There will be a court hearing on the 25th of September at Manchester Crown Court when the Crown Prosecution Service will announce whether they intend to go for a retrial on counts in the Lucy Letby trial where the jury failed to reach a verdict. More on that throughout the afternoon here on Sky News. As I say, I'm back at 11:30 tomorrow. Hope very much to see you then. Thanks for joining me today. Cheerio.